Hello and welcome to the Follower Academy webinar with me, David Jones, in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held at 7:30 on the 31st of October, Halloween. If you can hear a drilling sound in the background, it's not me trying to add a Halloween vibe to the webinar. There's some work going on in the office next door, so that's what that is. Hopefully the microphone won't pick it up. I'll just put the risk warning up here. So tonight's webinar, what we're going to talk about is the idea of social trading, copy trading, where you follow other traders. So we're going to go right from scratch with a real account that has been running for a while, but we'll look at different ways of selecting traders, how to manage the risk, how to add them to a portfolio, how to manage the risk again, and then how to actually follow them. And you'll see results on a live account that I've been using for these webinars for some time. So we'll see it all happening in the real world, how it actually works. So my background, I've worked in this sort of spread betting, the CFD trading business for sort of nearly 15 years. And I only came to sort of follow trading, copy trading about a year and a half ago. And that wasn't something I'd really been exposed to. But I'm definitely a convert. I still do my own trades on currencies and indices. But I do have a portion of money allocated to copy trading, and what you're trying to do, you're trying to be a manager of traders. You're trying to pick traders with a solid performance who can hopefully deliver regular, consistent profits. I look for like on a quarterly basis without too much volatility, too much drawdown. So rather than trying to be the super striker on the pitch, super trader, you're trying to be like the football manager and just manage it all and let them get on with it. But you'll see how it works as we go through this evening. I think that's enough of a risk warning for now. That's been up there for long enough. So the basic principles, we're not going to go through loads of PowerPoint slides for this. We are going to jump on the platform in a second and do this for real. But the basic principles behind it, we're looking to identify profitable traders. And then when we've chosen some traders, you can choose up to 5 traders, build a portfolio of these traders, then manage that risk. You can set individual risk levels that you'll see as we're going through this evening, and monitor positions on 2 different platforms. WeTrade is the one I use all the time, but if you want to see stuff in detail, you can do it on TradeHub. I'm going to explore both of these tonight. So we're going to start off by this identifying profitable traders. So what we're going to do, we're going to log on to WeTrade. I think I'm logged on already, actually. We'll look at the rankings list. I'll show you the different ways of sorting these people, and then we'll drill down into the data. So here we go. So when you first land, let me see if I log out. So when we first land on the Aondo page, I've got a couple of accounts that I use for stuff, but let's use that one. Is it remember the password? No. Okay, let's just do that again. So we're going to log on. Okay, so that's the page that I end up on. Let's make that full screen so it's nice and clear. And what I'm going to go to, I can go to my account, see what's happening with my account. More of this a little bit later. But what we want to start off with, so there's the account and the P&L and all that. We'll come back to that in a sec. We want to start off with the rankings list up here. So how it works is, I mean, you could do this yourself. If you trade with Aondo, you can effectively just make your track record available to be viewed, so people can see how profitable or not you have been over the period you've been trading. And that's what all these traders do. So they make their track record visible, and you can choose to follow them. That's really the top-down view of it. And what have we got here? We've got a load of traders. So we've got 228 traders found here. Have I filtered this at all? Let's just switch that off. We've got 767. I'll talk about this in a minute. 767 traders who trade on the Aondo platform, who make their trading track record available to be viewed, and you can follow their trades automatically. And there are various ways of sorting this. The obvious way, I think, to start, we've got this over the last year so far. We can choose different time periods, and we'll do that a bit later. But if we sort by P&L, so who's been the most profitable? That's interesting one. Straight in the top. So we can see the most profitable trader out of these 767 is Peter Lloyd 5757, who has racked up a very impressive 288% return over the 12-month period. Then number 2 is Raul Bermudo, who's racked up 261%. Number 3 is Giuseppe who actually I'm following already in this account, so I'm glad he's still doing well. So he's up 119%, and so it goes on. You can scroll down and see different aspects of traders. But this is where we come to the first filter, because what Iondo do, if you trade on a demo account, i.e. not with real money, it lets you make your track record available. Okay, so some of these people, quite a lot of these people on this page, aren't actually trading with real money. And my first filter is, well, if I'm going to follow you with real money of my own, then I want you to be trading with real money in the first place. If you haven't got the faith in your approach to trade with real money, I haven't got the faith to follow you with my real money. So you can see that the first real money trader here, how we know who is trading with real money is by the R next to their name. So R means real money. So Giuseppe is, Barbara is, I think we'll come back to her a bit later. Barbara is, but Peter Lloyd isn't, Raul Bermudo isn't, Watabo isn't, Basti isn't, Nils isn't, Votan is. Okay, so the R next to the name is real money. So what we can do, if you want to, something I do, is straight away filter and only look at real money traders. So let's click on that filter. There we go. So now we've gone from 700 odd traders down to 228. Okay, so again, we can sort by P&L. So there's the P&L, there's Giuseppe jumping to the top because those two demo account traders have jumped out. Okay, so I've dropped out because I'm filtering by real money. So here we go. We maybe have slightly more realistic returns now. I think when people are trading with real money, oops, sorry, they tend to have maybe be not quite so cavalier when it comes to taking risks. So we have, I think, a more sensible level of return. So the top one, Giuseppe, Barbara is number 2, 115%. Then Votan's a regular appearer actually in the rankings list, up 86%. And so it goes on, so down to number 10, the 10th best performer, High Trade 2, is up just under 33% over the last 12 months. And of course, we can flip this around. Let's say we flip it and say, well, right, the last 3 months. Let's have a look at that, sort by P&L. Barbara's at the top, 57% over the last 3 months. High Trade up 47%, High Trade 2, it must be running two different strategies, up 35%, and so it goes on. Okay, but let's go back to our longer term view for now, our 1 year view. So this is, a very simple filtering technique to start off with. So we want to see who's been performing well. So clearly, I don't have much interest, if we flip this other way around, in following the real deal, who has lost 35% over the last year, or any of these, because they're not making money. So I want to find traders first of all who are profitable. So there we go. So that's step number 1. I would suggest. I think the next step is well, let's drill down. Let's find out a bit more information about these traders. Let's have a look at Giuseppe. I do have Giuseppe in the portfolio, so we'll come to Barbara after Giuseppe. But let's have a click on Giuseppe. So what have we got here? First of all, we've got how they've performed. So the orange line here, that's Giuseppe's P&L. And it's the dashed purple line is the DAX, the German index. So we can have a look at the last 7 days. How Giuseppe, 10% the last 7 days. Okay, fair enough. He's had a good run. The last day, bit chopperama. Today, the last month, he's up just over 15%. The last 3 months, up about 15%. And the last year, there we go. There's that 120% odd figure. Okay, so we can have a good look, at how the trader's been performing. Is it someone who we think might be quite interesting? Member since 15th of April 2016. So that's when they logged onto the platform. Followers, only 46 followers so far. Performance since start up 132%. But now we start looking at a bit more at the nuts and bolts of what's been going on here. Now, first of all, the first thing for me, this person's been trading since 2016, but has only been trading with real money since June 2017. Okay, so I would need to take that into account. I mean, it doesn't appear to have affected the overall P&L of the chart. This is when they started trading with real money, but up until then, the track record was built up with demo money. Okay, but you can often see when people switch to real money, the P&L takes a bit of a turn, because as I'm sure if you've ever traded on a demo and then gone to a real account, the psychology with real money is completely different. So. But profitable overall, the chart, nice trend on the chart. Winning trades, 47%. That's a realistic number. And I always get a bit worried when I see people with winning trades of 85, 90, 95%, because you start to think, well, do they have a problem with taking losses? Do they hang on to stuff, hoping it's going to come back? But so that's a bit more realistic. Winning months, again, I think that's perfectly acceptable. 7 out of 10 months end up being winners. Last activity, last trade, and the number of trades this person's done. Okay, so there's some details there. Then for me, this is the next important one, the performance numbers. So we have how has that P&L been built up? So month on month, how have they done? It's interesting. Look at last year, very bad year last year, down 22% on the year, really getting clobbered in November of last year. And you do see that, I think, with quite a few traders, because remember last year that the big event was the US presidential election. Surprise win for Mr. Trump. Everyone thought markets were going to go down if Mr. Trump came in, and the markets haven't really looked back since then. So plenty of people got wrong-footed, I think, by the strength we saw in November and December last year. So a bit of a bad time for this trader. But you can see this year, month by month, only had one losing month so far, down just under 8% in September, but notching up pretty chunky profits, double digits percentage profits sometimes, and up 200% for the year to date is our trader here. Now down here we have the asset allocation. What does the trader trade? You quite often people will focus on the German index, the DAX. So you'll see a lot of DAX in there. But for this trader, a bit of euro dollar, oil, a bit of pound US dollar, Facebook, gold, and a mix of whole other stuff. So this trader seems to have quite a broad portfolio of stuff that they trade. We'll have a look at someone else in a minute and see how it works. And then we have some risk metrics and some details down here and what open positions have they got. So a few chunky profits in there. Big profit on Facebook, up 13,000 on Facebook. So we can see what trades they're running, what trades they've closed, all that sort of stuff. So get a feel for their trading style if you want to. Okay, so that's in there. So that's where you get a real that open book look at what this trader trades, how have they done, where do they do badly, where do they do well, all this sort of stuff. Let's just jump back and take a look at Barbara, because Barbara's going to be the one I think we're going to add to the portfolio. Where's Barbara gone? It's all about P&L. There we go. Let's take a quick look at Barbara, how this one's been doing. Let's bring that up. Oh, their profit has really rocketed over the last week or so. Anyway, so Barbara, only been on the platform since April 2017. Only been a real money trader since September 2017. So again, the bulk of this P&L has been built up on demo money. Okay, this figure is also important, maximum drawdown. This is how much of their profit have they given back along the way. It's all well and good making, let's say, 100% return in a year, but if along the way you ended up with your account being down 80% before bouncing back, then I think plenty of us, probably wouldn't have the conviction to stick with the trader through the tough times. So what we're going to see is relatively low drawdowns. So, I mean, 20%. It's not the lowest, but it's down there. There are traders with much bigger drawdowns than that. So there's trades. Again, a bit worrying. 93% of trades are winners. Does Barbara have a problem with hanging on to losing trades? We don't know. But that's maybe a little bit of a warning there. Last activity was today, 31st of October. And again, we can scroll down and see how this is done month to month. Now, these figures, look at the figure for October, a 40% return nearly in October. I would suggest that is somewhat unrealistic to expect those sort of returns every month. I'm not quite sure where Barbara's made the profit there, but clearly flattering the returns for the year. But even if you took that out, it's a solid year. One losing month back in June, but with that caveat, only been trading with real money since September. But she's I'm assuming it's a she, maybe not, but clearly done okay with real money since the switch. And then we have the normal P&L. So not P&L. The assets traded, the asset breakdown. So what does this person trade? Okay, so that's hopefully given you a feel for the sort of details that we can have. My word, how many open trades has Barbara got? Absolutely loads of them. Is there one that really stands out as being massively profitable? No, not really. So that gives us a feel for the sort of traders' track record. So the next thing we're going to look at building a portfolio. So we find maybe some interesting traders, and we added them into portfolio. So doing that, we're going to access this portfolio builder, which is really simple. We set risk levels for each and every trader, and then we can set it up to execute on a live account. Now the account I'm doing for this is live, and there are trades going through it at the moment, but I'll show you how you would set all that up as well. So let's say we think, well, actually, Barbara, we like the P&L, we like the mix of markets that Barbara trades, and we think, okay, we'll give Barbara a go. So we're going to add Barbara into the portfolio. So it's really easy. So if I click on follow, a risk warning comes up first of all. This trader currently has 71 open trades. You have got the option to execute the open trades into your account at the current market price. I don't want to do that. I want to follow future trades. I've got no interest really in having my following her open positions. She may have bought the Dow 2 days ago when it was 50 points lower than where it is now. I don't really want to follow her into that trade. I want to follow any new trades. So I'm not going to click on execute positions. I just click on add trader. So now I'm in the portfolio view. I think we'll just wait for that to come up. Here we go, portfolio builder. So these are 4 traders I was following already. And there's Barbara, who's just been added into the mix. So down here, this gives me an idealized view. If I went back a year and followed these 4 traders, or 5 traders, I should say, I would have made that level of return. So about 60% return if I could go back in time and follow them. Unfortunately, of course, there is no TARDIS trading. We can't go back to October 2016, follow all these traders and clock up a nice 60% return. But I'm hoping that they'll continue being good traders over the year to come. So there we have the traders here. Okay. So Edel Metal is one. Let's click on that one. Just have a look at this person's numbers. So there's Edel Metal. Dipped quite a bit actually. I wonder why I'm following that person. So over the last year, dipped a bit, but seems to have maybe making it back a little bit. But had a bit of a poor return there, but seems to be in recovery mode. So we can see all that sort of detail the same way we could with Barbara and Giuseppe. The next important thing to consider is the level of risk. So what we're going to do is click on the settings button. Let's start that off with Barbara. So what we do here, this is where we can dial up or dial down how big a risk we take on their trade. So let me try and explain this. So if they risk losing 2% on their account and I'm following them 1 for 1, then there'll be a 2% risk on my account. Now they may have a €100,000 account. If I've got a £2,000 account, it'll only risk 2% of my account on that trade. So it mimics it from a risk point of view. So I can dial this up or down. So I might choose to make it a quarter size. So if they trade at a level of risk that means financially they'd lose 1% of their account, I'll only end up losing a quarter of 1% in this example. Yeah, so the stop loss stays at the same place where they'd put it. It's just the size of the trade gets dialed down. So if you start following a new trader and you think, well, I've got 4 established traders who've done quite well for me, I'm following this new trader, I'm maybe not too sure at the beginning for this new trader, you can dial the risk up or down depending on what you want it. And if you're particularly confident, you can go 3 times the risk. So if they do a trade where they risk losing 2% of their capital, it will be done on your account for 6% risk of your capital. But let's keep it simple and just follow Barbara 1. There we go, confirm settings, and it's done. Let me just make sure I'm the same on all of these. So I'm 1 for Giuseppe, 1 for DAX Call 3, 1 for that one, Jane, and 1 for Freedom Itself. Let's bump Giuseppe up. He's on a bit of a hot streak at the moment. Let's bump him up. Let's go mad. Go 1.5. So if that one risks losing 2% of their account, it will be 3% risk on my account. And so that's it. So we've set up our risk. I'm going to come back to this page a bit later to show you how it would be if you didn't if you hadn't started execution already, but I don't want to stop it yet. I just want to show you something else about how it works. But Iondo also have, just one thing to mention, is negative balance protection. So what that means is if you've traded leverage products, spread betting or CFDs before, you'll know that the classic risk warning is you can lose more than your initial deposit. So your account can go negative if you have a massive move against you or the market gaps. With Iondo, that doesn't happen. So you never lose more than what's in your account. You have this negative balance protection. Okay, so that's that setup. There's an extra level of risk control as well. If I just go to my account up here, just on the top, there's this. You can see this figure here, 625. So what I've got in my account, I've got just over £1,200 in this account. These are the open. I've got a load of open positions running. We'll look at these in a second properly. So there's my open profit. So I'm up £62 by following these traders. And don't forget, this all happens automatically. I don't do anything. I'm following these 5 traders. The trades they do automatically get carried out on my accounts. I don't have to do anything at all. But I have a loss protection. This is basically a financial stop loss on my account. So if I click on here, I can choose a level. I can say, well, if the balance of my account drops to £650, close everything, close all the trades, and stop following any new trades. So it's like having a stop loss on my account. So I can set that to be whatever I want it to be within I think it's 5% of of the current equity, the current balance. Okay, so that's it in a nutshell. We're going to explore a few things now, but it's all about trying to find traders that have what look like good track records, finding ones that you're happy with the level of volatility, setting the levels of risk to the ones you want, the sort of level of risk you want per trader, and then setting a stop loss, effectively a stop loss on your account, and just letting them get on with it. And all I ever look at is this page here. How are things doing? Am I in profit? I might now and again, every 2 or 3 months, I'll review the traders. I don't want to be chopping and changing them every week. I want to give them, I recognize there's going to be the odd dip now and again. But if someone has a bad run for 2 or 3 months, then I'll think about swapping that trader out. And it's as simple as just clicking on there, clicking on remove. That trader's gone, will go. You won't follow any more trades from that trader, and it'll close any open positions that trader's got on your account. But you can look at things in a bit more depth. So if I just go to this drop down thing here and go to Trade Hub. So Trade Hub is Iondo's trading platform. Okay, so if we log in, so this is a trading platform you're probably familiar with. When it comes to buy and sell, you have watch lists, you have prices, all that sort of stuff. And there are 2 flavors to this trading platform. So I've logged in to the self-directed trading one, where you can trade for yourself. So you have normal spreads and stuff like that. But what I'm going to do, if I flip over, hopefully you can see this, to spread betting social follower. Here we go. So this is my account where the trades are going through following the others. So there's the account balance. You can see up there, just over £1,200. It's dipped a bit, the P&L, since we were looking, but it's currently at £60. And then what I can do, if I bring up this window here, so I haven't looked at this for ages, since the last webinar. These are all the positions on my account. So these are all the trades going through on my account, or the open positions, sorry, on my account. So you can see, and they're quite small, a lot of them. Let's look at German 30. So there's a German 30 trade in here, buy 0.98764 a point. That's up currently £26. A tiny one there, German mid-cap, buying in a fraction of a penny a point, again, because I've got my risk dialed right down. So hopefully this demonstrates you can make the risk whatever you want it to be. If I split this into individual positions, you'll see it's all broken down to lots of tiny trades that these people have been doing that I've been following. So you can see the overall P&L is pretty small because I've got the risk dialed pretty low for these traders. My biggest winner at the moment is this DAX trade here, is up a £5. And if I click up here, aggregated positions, it groups them all together. So I can see my total exposure for all markets. So the DAX, I'm just under £1 a point on the DAX. What else have we got in here? Bitcoin, I'm short Bitcoin, really? I don't want to be short Bitcoin, but there you go. It's short Bitcoin about what, 0.022. So that's 2.2p a point on Bitcoin. So hopefully you get a feel for how this all works, and you can, if you want to, of course, you can go in and close trades yourself, alter stop losses. But if you do things like alter stop losses on trades, it means it means like you're in charge of that trade. Now, if you take a stop loss off, you're in charge of that trade. It's not going to be automatically executed when the person who put the trade on in the first place closes their position. So for me, I just don't interfere with any of this sort of stuff. Yeah, but if you want to get into like a granular level of detail, you can log onto the account and see what's going on. And clearly, of course, up here, as you can see, the P&L will change, the profit and loss will change as trades go through. And as the value of your existing positions fluctuate. You can do the normal stuff if you want to see history, account history. There we go. So there's trades that have been carried out on my account. Closed a position on the Dow about 7:25 this evening, booking a massive 88p profit. Closed a position on the Nasdaq, booking £1.49. Closed a position on the S&P, losing 12p. Opened up a few positions since this webinar started. It's opened up 1, 2, 3, 4 trades on the DAX, and it's as easy as that. So you can see transaction history, any cost of financing for trades, because you're trading on leverage. There's a financing amount involved, but it's pretty straightforward. And if you want to go and do some trading of your own, you can flip over to spread betting trading, where you get proper market spreads. I mean, the spreads for social trading are a bit wider because the people you're following get recompensed typically, through the spread. So you'll see a wider spread there. So if you're under your own trading, you can flip onto a normal trading platform. So if you think, well, actually, I think gold's going up, we can trade gold in the normal way. We can put our trade on and bang, do a trade in gold. But for now, let's just flip back to the social trading. There we go. Oh, my P&L is moving a little bit higher, £67. There we go. Let's just flip back to the PowerPoint for a minute. Oh, there we go. So we've done that. We've built our portfolio, set risk levels, executed on a live account. You can manage the risk. We did all of that. The negative balance protection. You can use WeTrade for the high level view, and that's that view, the sort of the big top-down view. And if you want to get into real detail, it's really easy to flip over and log into TradeHub for a detail view. Let's say you change your mind. So I have all these people I'm following now. I'm up 69 quid, whatever it is, of course it's changing. I can stop execution. So if I think, I don't like the markets, I'm not so sure on these people I'm following, I want to stop. It's going to take maybe a bit of time to go through, it's seconds, but click on stop execution. Do you really want to stop the execution of your portfolio? Yes, I do. Okay, so what it's doing, it disconnects the portfolio effectively from the live account. It closes all the open positions, assuming the market's open. If I had a trade on, let's say, a UK share in there somewhere, it can't close that position until the market opens the next day. So it might take a bit of time, but it also will close all the positions out, and I will stop following any new trades. Okay, so any new trades my little team are doing won't be mimicked on my account. Okay, so and it's as easy as that once it's done. I think I stopped it halfway through there, sorry. So the trades will be, there we go. So all the trades now, you can switch this confirmation window off, are all getting closed on my account. And there are a fair few trades in there. Okay, so it will take a while to go through. And that's it, so you can adjust position sizes in TradeHub if you want to. You can view your account history, create account statements. We did that logging in directly from the trading platform. You can see all these key figures, obviously, pretty important stuff if you're used to trading. How much cash have you got in your account? What's your running profit or loss? What's the value of the account? All of that up there. You can change positions if you want to. Again, I wouldn't recommend doing that. Financing costs, just to talk about that again. If you hold a position overnight, which plenty of these traders do, they're not really jumping in and out so much during the day. They will run trades overnight. Financing costs, they will be incurred normally if it's held overnight, and you can have a look at that. Again, because the trades on my account anyway, tend to be pretty small because the risk is dialed down, the financing is pretty small as well. but you can run things like statements to see how well things have performed. Okay, so let's go back. There we go. So now it's closed. It's stopped doing everything. So if I go to my account, there will, I think, there we go. So it's closed out all the trades. I've got £1,259 in my account now with no open profit. I'm going to have to click through all of those, I think, aren't I? We'll come back to that. So what I would do now, it's as if I'm starting afresh now. So I've built up my portfolio of 5 traders. So let's say you was just setting up your Aondo account for the first time. This is what you'd see. You'd build up your portfolio of traders. Here are the 5 people that we picked. And I'd now pick execute on live account. So this is me starting from scratch. So these are all the open trades that people have open. I don't want to follow their open trades. I want to follow any new trades. Click on execute portfolio, and that's it. So now I've gone back into following all their trades. Okay, so now any new trades that are done, I'll be following the trades on their account as they go through. And this is down here. This is the chunk of trades I close. You can see them all here: 759, 758, 758, and so it goes on. These are all the trades that got closed when I disconnected my portfolio. But hopefully it just shows it's just as easy to switch it on as it is to switch it off. You know, so managing the risk and all of that is a couple of clicks, and you just do it through a web browser. You don't need to go into there are going to be so many windows there, aren't there? I wonder if I log out and log back in again, it'll stop showing those windows maybe. You don't have to sit there. It's not a complicated process to close out any trades. Let's go back in and see what's going on. Okay, am I in the right account? Yes, I am. So there's a few. So these are the open positions that couldn't be closed. So this is why my account is showing £30 P&L, because these are positions where the market is closed. So on European shares, mainly by the looks of it, the Spanish index there. So they can't be closed yet. And then, of course, if any new trades are done this evening by my little team of traders, they'll go through in here and go through onto the account. And that's it. You know, it really is. It's as straightforward as that. I think when you first open an account, you can trade with demo software, so you can play around with it and see how it works. I think for a month you can do a demo when you follow other traders. But it is really as straightforward as that. I think if it's something that sort of piques your interest, I think it's worth just logging on, maybe setting up a demo, playing around with it, or putting in a small amount of money and just following a few traders. You know, because they do all your stop losses and you can set your own levels of risk, you don't need to take on massive levels of volatility to get this stuff working. So I hope you found this evening interesting. I found there's been a couple of questions that have come through that I think I've answered them as I've gone through. So just on that, again, just on the Trade Hub, someone's asking to see Trade Hub again. So there's Trade Hub. So that's my Trade Hub follower account. So I can trade on that if I want to, but I'll pay a wider spread. But if you flip over to the normal spread betting account, you can see there are no open positions there, but I can trade on that in a normal way. And it's very easy to flip between the two. So someone's saying, which one do I look at? I think, like I said, what I look at is just the WeTrade version. So the really sort of high level view, because all I'm concerned about really is my sort of running P&L and the balance of the account. So I'm not too bothered about, has Barbara bought the DAX 15 minutes ago? Is Josep going short Facebook? You know, I really want to just focus on this high level view. Hang on, let's see. Hang on a second. There's another question come through, but because I've messed my screen up, I can't actually see it. Hold on a sec. How about the spread with a small portfolio? It's the same. You know, it's exactly the same, because if you're following 5 people, I mean, like this, you know, what I've got is a relatively small portfolio. I'm following 5 people. You can see the size of the trades. They're pretty tiny, you know, and the spread is the same. So if they'd bought, so if whoever it is bought the Spanish 35 rolling, so the Spanish index, if they bought that, and I was doing it on a £2,000 account, and I was doing it on a £200,000 account, the spread is the same. So you're not penalised for having a small account. You know, the spread is exactly the same. So what we're concerned about is the risk, the risk per trade, sort of dialing that up and down. And they still have things like stop losses. So if you have, only a couple of £1,000 in there and you're following 5 traders, you're not going to be any worse off from a spread point of view or a financing point of view because of that. So hopefully that answers that question. But I say give it a go. If you go to Ondo, try it out. I did blog about, I need to update it, but I blogged a bit about a real sort of social trading account, another account I was running. If you go to my website, tradeafter.com, you can see a few months worth of progress on there. And I do need to do an update. I'll hopefully get around to it before the end of the year. But you can see it. Again, it's a step-by-step process of what all this stuff means. So you can see it on there and hopefully you find that useful. But if you go to Aondo's website, you can see all of this, set up an account and have a play around with it. But it is, it is as easy as I've shown it tonight. Clearly, it's maybe not easy to pick the good traders, because they will go through bad patches. They won't be profitable all the time. But what we're trying to find are hopefully ones that are reasonably consistently profitable and have a handle on risk. And I think drilling down lets you do all of that. But we'll wrap things up there for this evening. I'll let you get on with your Halloween. I'm sure you've all got trick or treating that you need to be going out and doing. So thanks for coming along tonight. I hope it's explained how things work if you didn't know how they worked in the first place, and it's given you maybe a bit of an appetite to find out more. But we'll close it off there. Thanks for coming along, and hopefully see you on the next webinar.